Hello and welcome to this course. As you can see here, we have our configuration. Without hesitation, we take 3 positions. In this course, I will share with you something important about trading, is the relationship between trading and addiction. Before that, as you can see here, we are supported by this support level, and I'm sure that the price will continue in our direction. The right words is we have more probability that the price will continue to our direction, because in trading, nothing sure. Okay, back to our subject. Addicts is a dirty word associated with perceived down and outs of society. Those who sleep on a park bench or live from one needle to another. But addiction invades slowly and can hit anyone at any time, although some are more susceptible than others. Genetic components definitely can and do play a role. Research has shown that the brains of addicts metabolize and process their drug quite differently from non-addicts. There is a reason to believe that one part of the brain in particular is involved, and that's when it has been activated. The addiction takes over and stimulates uncontrollable behaviors. Trading involves intense exercise of the brain. It constitutes constant analysis and problem solving as performance-based skills become increasingly fine-tuned. Serious players of chess, poker, and successful athletes develop and grow in similar ways. However, trading can become an instrument for destroying mind, soul, body, and lives, and become an addictive activity. Whereas an addiction to alcohol and other drugs are substance addictions, an addiction to trading is a process addiction and is much more difficult to spot and overcome. I experienced addiction to trading a few years ago, and I spent more time in front of my laptop compared to my family. It was a difficult days for me and for my family. After I had my daughter, I became more addicted to her than trading, and she helped me to find a balance between my family and my business. Very important as a trader to find this balance, because in the end of all, what we do as a traders is for our families at the first place. As you can see, our positions are in the dark side, waiting for a movement to our direction. We need a stop loss at this level. Okay, the reason for that is this level is a support level, and to avoid any fast movement. But if the price collapses, I will close before that. I need a red candle below the VWAP to close this positions. Okay, we need to add the same stop loss to each position. Okay. Okay, and we need to add the take profit at this level. Okay, a significant level. Okay, and we repeat the operation for each position. Control C and Control V. Okay, the last one. Okay, now we secured our positions. No need to take any action now. Just watching the movement of the price, and be ready to close if you see any signal to close. Very important to stay calm. Cool, we have here 3 positive trades, and we need to secure those positions as soon as possible. Before that, back to our subject. Even if we assume that traders do not have more frequent addictive behaviors than the general population, the statistics tell us that in all likelihood, nearly 1 trader in every 10 has a addictive problem. For the traders with attention deficits who cannot tolerate boredom or lack of stimulation, trading provides action. For the traders who is depressed, trading can provide an escape from the self and a sense of immediate gratification. Such traders need to trade and keep trading when they have no edge. They lose their money, generate failure experiences for themselves, and create hardship for their families. For them, it's not about discipline and following trading rules. For the addict, such efforts are useless. For in all probability, he or she is fighting against forces far outside conscious control. Okay, we secure $500 as a profit and waiting for the best moment to close the second position. Okay, very important to know that there is what we call major economic events in trading. Economic indicators are closely watched in the investment world. Their release can have an immediate and volatile effect on the market. There are three main types of indicators: leading, coincident, and lagging. Leading indicators are believed to change in advance of changes in the economy, which can give you some idea of what might happen before it actually occurs. Coincident indicators reflect changes in the economy at about the same time they actually occur. Lagging indicators change after the overall economy changes and are a little used for prediction. Interest rates are a major driver of markets, and each economic indicator is watched closely by the Fed as they decide on their monetary policy. For this reason, many of these indicators can have substantial effects on the market. Back to our graph, as you can see, the price pushed down, be ready for any change in the orientation. Okay, let's talk about gross domestic product, GDP indicator. The GDP report is the most important of all economic indicators. It's the biggest measure of the overall state of the economy. The GDP number is released at 8:30 a.m. East of the last day of each quarter, and it reflects the previous quarter's activity. Let me secure this position on the break even. The GDP is the aggregate total monetary value of all the goods and services produced by the entire economy during the quarter being measured. This does not include international activity. However, the growth rate of GDP is the important number to look for. There is also the Consumer Price Index, CPI. The CPI report is the most widely used measure of inflation. This report is released at 8:30 around the 15th of each month, and it reflects the previous month's data. CPI measures the change in the cost of a bundle of consumers, goods and services from month to month. Okay, we close this position because the price pushed down. Okay, I will explain in more details each indicators in my next courses, because it's very important to take in account those dates and no need to trade when GBP or CPE launched and the market will be agitated. As you can see, we have here more than $700 as a profit. Not bad, a little bit difficult. For many traders who don't know when to close these positions will be negative. The key here is the management of your positions, and you need to close and secure your positions at the right time without hesitation. As you can see, we secured $500 after we closed the second position with more than $200 because we see that the price will go against us, and the last one closed on the break even. As I said, management of your position is the key to be a successful trader, and I hope with this course and live trades you learn how to manage your positions. Thank you, and see you in the next course.